Big news just dropped that could affect mortgage rates, and almost nobody's talking about it. President Trump just announced that he instructed Fannie Mae and Freddie Mac to purchase $200 billion in mortgage bonds. Now, if that sounds boring, here's why it matters. When the government steps in and buys mortgage bonds, it can increase liquidity in the mortgage market, and that can help keep rates more stable or even push them lower. And the market reacted positively to this news. Now, this is something we'll be watching really closely in the next few weeks. Now, here's where the job market comes into play, because this is part that most people miss. The first week of 2026 brought a wave of market data, and the trend is clear. Hiring is slowing down. Now, according to the Bureau of Labor Statistics, employers added just 50,000 jobs in December, missing the forecast of 73,000. Now, on top of that, October and November were revised down by another 76,000 jobs combined. Yes, the unemployment rate also dipped slightly from 4.5% to 4.4%, but that doesn't mean that hiring is booming. It's more about how people are being counted. Now, private sector data backed this up. Companies added 41,000 jobs in December and after losing 29,000 in November. Sounds okay until you look at the bigger picture. Over the past 5 months, private payrolls are only up 27,000 total. That's barely moving, you guys. Okay, now we're also seeing more cooling signs. Jobless claims remain elevated. Job openings are shrinking. Job cuts are still high. And hiring plans are quiet across many industries. Now let's talk about housing. Delayed government data showed housing starts fell 4.6%, hitting their lowest level since the beginning of the pandemic. Building permits, which is basically the future pipeline of new homes, also came in lower. And that means fewer new homes are coming online, which keeps pressure on prices and competition. So here's the big picture, you guys. The job market is cooling, housing supply is still tight, and now the government is going to step into the mortgage market in a big way. That combination often creates opportunity both for buyers who understand it and the realtors who know how to position themselves for it. Now here's your truth bomb of the week. Slower job growth doesn't automatically mean a recession, but it does increase the odds of lower mortgage rates. The bond market reacts first, long before the news headlines catch up. And if you're in Bakersfield or anywhere in the U.S. and you want honest mortgage advice with zero fluff, subscribe now because I've got new tips every week.